CEOs and economists are warning Australia will be hurt if Donald Trump engages in a trade war with China.
Confirming we have interest rates on hold today at 4.35%. Confirming again 4.35%. The Reserve Bank has left the cash rate on hold.
As the sun sets on 2024, Australian shares are set to notch up their best annual performance in 3 years. Who's leading the pack? Who's missing out on the rally? And what can we expect in 2025? Hello, I'm Rebecca Jones and you're listening to the Bloomberg Australia podcast. This week, we're taking the yearly temperature of Australia's stock market, which for the most part has been going gangbusters. Let's take a look at what companies have emerged as 2024's biggest winners and commiserate with some of the losers. We'll also get a sense of what we can look forward to in 2025 as Donald Trump returns to the White House, the RBA potentially makes that long-awaited rate cut. And to help me do all of that, I need Georgina McKay. She reports on stocks for Bloomberg News in Sydney, and she's here with me now. Welcome to the podcast, Georgie.
Hi, Beck. Thanks for having me.
Georgie, so the ASX 200 has hit numerous record highs this year, and the year's not over. One of the things that I've noticed that's been different about this year is that we have seen some IPO activity. I say some because it hasn't been an incredible amount, but just last week, we had another company join the ASX. That company is called DigiCo Infrastructure REIT. Actually, the biggest IPO in 6 years. It raised 2 billion Aussie dollars. Can you tell me a little bit about that?
So DigiCo REIT debuted on Friday the 13th of December, and now there was a lot of hype going into this IPO. The IPO market's been fairly quiet. There haven't been too many offerings this year. So there were many keen investors trying to get a piece of the action, so it was oversubscribed. But then on the other hand, the market chatter was that it was a bit too expensive. There were concerns on the valuation. So this company is investing in infrastructure assets related to data centers. So it's a play on that AI theme, which is quite hot at the moment. But ultimately, in the first day of trade, after a fairly whipsaw session, the stock fell 10% prior to the close. And then on its second day of trade, on the Monday, it fell again. So not a great way to fill the IPO market with confidence. And that listing came on the back of Guzman y Gomez, so the Mexican-themed fast food chain. And that was back in June. And that listing went just gangbusters. The stock surged about 36% on its debut. And all year, people have been hoping things are going to come back online. And GYG was possibly the thing that was going to do that. And then maybe it was going to be DigiCo. But now we're going into the new year and maybe we might finally see Australia's IPO market come back.
What about performance overall, Georgie? How has the ASX 200 had such a good year?
Now, notwithstanding Thursday's global sell-off, driven by the US Federal Reserve seeing fewer rate cuts next year, the benchmark gained about 10% so far, and that's putting it on track for the best year since 2021, with tech and financial stocks leading that advance. Now, tech stocks have rallied globally, largely fueled by that artificial intelligence hype, and then with financial stocks, which is predominantly Australian major banks, which is the most heavily weighted sector on the benchmark, that has really lifted the overall gauge. CBA and Westpac have rallied, leading gains among the majors, and CBA is actually the most expensive mega bank stock in the world, more expensive than JP Morgan, for example. And there's a few reasons behind that. So elevated interest rates in Australia, better than expected earnings among the banks. And then when we're seeing a bit of concern about the uneven economic recovery in China, and with investors not wanting too much exposure to China or no exposure to China, then capital was flowing into Australian banks as a relative safe haven. It was out of the mining stocks, which are more exposed to China's demand for commodities. And so that was part of the reason that we've seen this enduring rally just to the bewilderment of the street. So CBA has almost all sell ratings with a few holds, but no buys. And all year everyone was saying this rally is completely unjustified. It's going to come to a halt, but the rally has really just continued.
Interesting about CBA being the most expensive bank stock. And of course, fun fact there is that Matt Coman is the only CEO of one of the big four banks that isn't brand new to the job. The other three have all got new CEOs this year. Georgie, how do we compare here in Australia to global markets? And how expensive are we, relatively speaking?
So the Australian benchmark is expensive relative to Asia and to other Asian developed markets, but compared to global benchmarks, so say the S&P 500 and then the NASDAQ, we're fairly in line, if not we're a bit cheaper. But then New Zealand is the most expensive major index in Asia.
What's that? Is that because they're smaller or...?
When we're seeing market turmoil in Asia and risk-off sentiment, when there's political volatility, as we saw, for example, in South Korea, or when there's economic concerns surrounding China, then we often see New Zealand green on those seas of red days.
What has been the best performing stock of the year, back to the ASX now, for us in Australia so far?
Zip, the payments company, has been the best performing stock by a long shot. And that's coming off the back of a few disappointing years. The stock has gained about 350% for 2024. Now, the bullishness on the company among the investment community, part of that's coming from its growth prospects in the US. So Junbei Liu, a hedge fund manager at Tribeca Investment Partners, who's soon actually going out on her own, she said that the buy now, pay later theme, it's pretty new in the US. The payments market is a lot bigger and it's far more diversified. So that's presenting significant opportunities for a company like Zip. If they can snatch some of that market share, then that could further fuel the stock rally.
And on the flip side, what's been our worst performing stock this year so far? The year's not over yet.
A lithium producer, Liontown, has been the year's laggard. Now, Liontown has been in the headlines over the past few years. It was the subject of a huge takeover that ultimately got killed by Australian billionaire Gina Rinehart. And then this year, we've seen an oversupply in the lithium market that has infected all lithium companies, and Liontown wasn't exempt from that. They had to curtail production at their flagship Kathleen Valley mine in a period of severely depressed prices. But UBS, in a recent note, they think we might have finally seen the bottom of this prolonged lithium downturn. So perhaps the future and the year is looking a little brighter for Liontown. But the weak demand for electric vehicles and in China and in other global markets has certainly impacted the company in the broader lithium market.
And when we come back, will the golden run of Australia's stock market continue into 2025? And welcome back to the Bloomberg Australia podcast. I'm Rebecca Jones. Today I'm talking to Sydney-based stocks reporter Georgina McKay on the year that was for Australian stocks and what's in store for the year ahead. Georgie, we do have a rate cut expected sometime in the first half of 2025. An election, let's not forget about that, due by May. What are the people you're talking to telling you about how this could all play out for Australian stocks?
When that rate cut finally does come through, we're likely to see some movement in the consumer discretionary space. You know, maybe something like Supercheap Auto or electronics retailer JB Hi-Fi, which has performed quite strongly in recent times, or jewellery retailer Lavisa, when we're seeing people a bit more confident with their money. But then in terms of bank shares, this is something that people are waiting for to come through, a cut in interest rates, and that might actually compress net interest margins. Now, net interest margins are a key measure of profitability for Australian lenders. So with that, and then with increased competition, when we're seeing a possible recalibration in mortgage markets, then that could be to the detriment of banks and their earnings and possibly their share prices.
And another big factor, of course, in share market performance globally is the return of Donald Trump to the White House. Let's take a listen to economist Chris Richardson speaking on Sky News recently about the potential impact of his policies on Australia.
Australia is a small country that sells to a big world. As it so happens, we don't sell a whole lot to the US, and they don't buy a whole lot from us. So it's not the direct threat. The risk is more that our main trading partner, China, does take a hit from these tariffs.
Georgie, what sectors are the experts telling you are going to be the most impacted by Trump's threat of potential tariffs, and quite significant ones too, right?
For Australia, the thing that is front and centre would be the heavily weighted on the exchange and then very important economically, mining and commodity space. So tariffs on China's proposed tariffs on China or other trading partners might slow overall global growth. And then from that, we might see demand for commodity prices decline. And then that isn't going to be great for our mining stocks that for this year are already on track for their worst year since 2015. So definitely people are thinking about that and how it's going to play out for that sector.
Okay, but on the flip side, can I ask you what stocks may actually do better if Trump does make good with his threats on tariffs? And indeed, what happens if China strikes back and imposes their own?
Still looking at the commodity space. So if China restricts, say, their exports of rare earths in retaliation to the US's proposed tariff, then this could benefit a company called Lynas. It's a rare earth producer. And a Baron Joey note that I was reading recently pointed out that it is the only integrated separator of rare earths outside of China. So that stock could certainly benefit from this tit-for-tat trade war as political tensions intensify. And then Trump has also been a very public supporter of the oil and gas sector. So there's quite a few plays in that space listed on the Australian Exchange. We've got Woodside, Santos, Beach Energy and Karoon. And then any stock listed in Australia that generates a significant amount of revenue in the US could benefit with that America First strategy and trying to keep operations inside the United States. So a company like BlueScope Steel, it rallied when Trump made comments about tariffs just a few weeks ago and is a huge operation already inside the United States. And then a company like Worley also has big operations in the US. Oh, and then Zip and Block. Block is based in the US. Zip is focusing on the US in terms of its strategy. So companies like that, there's many different ways to play the Trump theme on the Australian market.
The Trump card, could it be one? Georgie, finally, let's do a little bit of crystal ball gazing. Will the performance of the ASX 200, the strong performance, continue on into 2025? What is your prediction of where we're going to see it ending up at the end of next year?
Yeah, many of the people that I've spoken to see the rally continuing, but they're saying we won't see the same level of growth or the pace that we've seen over this year. Now, there's a few things driving that bullishness. There's Australia's status as a relative safe haven within Asia, meaning it can withstand the political volatility happening between China and the US and any other trading partners. And then on the other side, we've got domestic factors like a rate cut, increased fiscal spending ahead of an election due before May, and that's boosting growth inside Australia. So then those factors all together, we could see the share market benefit and the overall economy.
It is a really complicated puzzle. Georgie, thank you. Some great insights there. And thank you for listening to the Bloomberg Australia podcast. On that note, this is our final episode for 2024. We'll take a short break now and be back on Jan 16 for more conversations with the journalists of Bloomberg's Australian newsroom on the biggest stories shaping our place in global business. This episode was recorded on the lands of the Wurundjeri and Gadigal people of the Kulin and Eora Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Sarah Wells is our Senior Executive Editor and Emma O'Brien is Bloomberg's Head of Media Editorial. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.